In this video, a simple day trading strategy for crypto that anyone can use. We're going to look at how to actually implement this strategy, how to put price levels on the chart, and then some things to think about when actually day trading in terms of how you place your trades and how much risk that you actually take in comparison to the reward that you think you're going to get out of that trade. Timestamps and the steps for this strategy all linked down in the description. Step number one then is to get the chart set up in the right way for this strategy. I trade on BitGet, so I'll show you this. Link to BitGet in the description. If you are a day trader, then you can get up to $8,000 as a deposit bonus on BitGet, so check all of the details via that link. What we want to do is set up some different setups on the chart. The first thing is we just want to go over to the day chart right here and make sure that everything is right here, because what this strategy is actually going to do is taking advantage of longer time frame targets and also shorter time frame targets. Remember, we're day trading here, and so we have to look at more of the shorter time frame, but giving the longer time frame price targets is going to really help us out to identify the trend and where to actually place our trades. The first thing I would do right here is make sure you have some moving averages on the chart. I've just got simple moving averages, 50, 100, 200. So we can go over to that very easily, which is this right here, indicators, and just search for moving average and then put those on. You can set up the colors and everything as you like. The really important thing though, during the chart setup is to understand that we're on the day chart right here, getting our longer time frame targets. Now, support and resistance, I'm sure you know about, but support and resistance is where we plot these lines right here, and we want to see where support and resistance is, where the chart moves to. So as you can see, this yellow line is, what I would call macro support, right? We had a massive sell-off at this level, and this is obviously a huge dump from essentially a resistance area all the way down, which created a new support area. And you can see we've actually touched this twice. Now, when we come down to actually zoom in, you'll see something very important right here. But what I've done is put that macro bottom, the macro price support on the chart right here, because that is what we would trade to on a longer time frame. Now, what you can see if we zoom in as well is that I've also put some much more micro levels on here as a resistance. So this line right here would be the resistance for this kind of last 2 weeks, right? This would be, as we can see, a swing low right here, and then a swing high as well, and resistance from it where the price moves down. So that's what you want to get, right? You want to get kind of macro levels. So this was another macro level, but this is totally out now, right? It's irrelevant now. We have, during this swing in the price, we have this clear support, and then the swing high here is where you would put your resistance. So swing high and swing low over a certain swing of a trade is where you'd put your support and resistance lines. But also as well, like I said, micro as well, this would be the swing high. But as this trade has moved on, you can see we're also getting a mid level as well, or a kind of micro resistance. The support is still the same because it hasn't been tested, but you can see as we get the swing high and then sell off into that, we now are seeing more resistance here at this mid level. So this for me would be the micro swing high that we would trade to. So support and resistance, just look for swings in the chart where you see a support level to the downside and a resistance level to the upside. But when you're trading, because we're day trading now, so I would take this one. This is definitely more relevant for us, right? So getting support and resistance on the chart is absolutely vital. Just look for swing highs and swing lows. But when you're day trading like we are right here, we want to look for, the micro swing highs and lows and the support and resistance. So that is how I've plotted it on this chart right here, as you can see. Now let's go back to some trade basics and understand risk reward ratio. Like I said, with this trading setup, what we're going to be doing is taking these longer term targets, kind of the day chart targets, and then we're going to be switching down to something like a 5-minute chart, 15-minute chart, something like that, to actually piggyback off orders and trades and see where the very short term price action is, as you can see here. So what we've got now is the 5-minute chart, and what you should be able to see is the yellow lines that I've drawn in, as you can see down here. that we got our day trades levels to, right? So that support and resistance that I drew in on that day chart, you can see it's actually a lot further away from the price action, as you can see here, but we're going to be trading on this 5-minute chart. So what do we do here? Well, we want to be looking at swing highs and swing lows to have some price targets for our trade. And so the 5-minute chart gives us much more detail over the short term as to where support and resistance levels are that we can trade around. Now let's go back, as I said, to some trading basics. When you day trade, there's so much that can go wrong in the trade because you really are trading a very small amount of price movement because we're trading on the 5-minute chart here instead of the day chart. And so when we have our trade open for a lot shorter time period, we're not going to be getting any risk rewards of like 5 to 1. It's going to be almost impossible. You have to really just be an absolute perfect trader to be able to see a ratio, a trade that is going to pay off 5 to 1, right? It's very, very unlikely. So when we're day trading, we are taking more risk that something happens, a bit of news comes out and the price changes immediately and we're out of the trade. So really for a day trade, we're looking more of like this scenario right here. And so we do have a probability of not being profitable if we're choosing kind of really bad trades like this. And so as you can see, you do need to be profitable around 50% of the time, but actually that's not too bad. You know, 50% of the time is very attainable. And so if we're getting a 1 to 2 risk reward in terms of our stop loss and our take profit, then we could go into those trades. Now, you don't have to go into trades like that, but sometimes you see a trade and you think that's worth it. So this is great to understand that with a day trade and a short-term trade, really looking at risk rewards around this level. And you know that you've got maybe a 50% or more win rate, then you're going to be making profits. And so that's what we're going to look at. So now let's use the different time frames on our chart to give us a direction. Do we want to trade long or do we want to trade short? What we're going to do is go back to the 1 day. Remember, we're just trading 1 day to maybe 5-minute charts, right? So as of right here, what we're going to do is go in and see how this price action steps up. So for me, this is bearish price action. A few reasons for this. We have a support level right here that came on and a massive rally. But importantly for me, this is on the day chart. We have another test of this support and we actually broke it. See where this white line is right here? That would be the support on these candles. And you can see the next time we actually came to test this support, we actually broke through it and made a new support level. That's bearish, it's a lower low, right? Even on this kind of small 2-week time frame. We also have this level here, which has created a new resistance level. Remember, this was the resistance, but as we came and sold off from this, we then got rejected at an even lower price. So that's a lower high. We then have this support, and this is again a lower high, right? Because we bounced off before, got to this level, bounced off again, and we got to this level. So for me, on this day chart, on the longer time frame, you have this, and you have this, which is all bearish price action to the downside, showing us that buyers are not winning here. Every time they try and pick up, the sellers are coming in and forcing them lower still. And so what we're looking at here on the longer time frame, if I was to trade on a longer, you know, kind of swing trade or something, you just be going short here, even though we're in the middle of this range, which is typically not a great place to trade, right? You know, you want to see it maybe bounce up and then take a short position here down, you know, because we have to remain bearish because this is bearish price action. Even so, for a day trade, we can actually trade this on the 5-minute, knowing that, yes, we're going to be bearish and we're going to see if we can make some shorter trades on a day trade. So now what we do is go down to the day trading chart, like 5 minutes, 15 minutes, and get some extra micro price levels because we're going to be trading on that. So we're using these macro price levels as targets, price targets, but what we really want to trade is down on the day trading chart. And so you want to see these price levels as well. So as we can see here, this is the live price action. We want to go back a little bit to what this trade would have been like. And as you can see, we're going to be trading short because that's what the price levels are telling us. Now, if we go right up here, that is the swing high from that that dump that we saw, right? So this is not what we trade, it's miles away. This was the mid price, so the more recent kind of resistance level recently. And now, as we can see, if we go down to the 5-minute and we're trading around this, this is yet another resistance level, so even shorter. Now, the ideal scenario for any day trade when you're trading between a short-term and longer-term support and resistance levels, what would be great is if we actually came up to this mid price level again and met resistance here, then you can trade bounces from that to the downside in this case. Now we didn't even get there. So what we have to do is essentially trade a new level. Now you want to be as close as possible towards those resistance levels if you're going to the downside, opposite for the upside, right? Remember, this is the more macro midline level. So what we really want to be doing is taking short positions on rallies, because remember, in a downwards facing market, you want to be shorting rallies as they come down and sell off further, right? So you always want to be with the market. Now, ideal scenario would be this price here, but we can't get that because the price didn't get there. So what we're seeing here, again, is further weakness around this level, around 16,680, something like that. Now, what we really want to do now is see further weakness in any rallies. So we see a rally here, and that's our first price level here. Then we see a rally that gets sold off, another kind of weak rally, and then we see another rally into this price level and yet another one. So you want to be selling one of those rallies, right? And you want to be taking a short position. So at some point, you want to be taking a short position after the rally has occurred and after that weak price action comes in, confirming that this price level is a good resistance. The reason why we really need resistance is because we need to know where our stop loss is, right? Because we're seeing a lot of resistance around this level, we can be more secure in putting a stop loss around this level, knowing that that is what the market is trying to tell us, that this is a resistance level. So once we see a rally into this level again and selling off again, then we can take a short position anywhere around here. If you can take a short position right here, that's great, but not many people can time that very well. But we have a lot of time here that we can actually trade. So let's say we put in a short position right here, and where is our stop loss? Well, we don't want to take our stop loss at the mid level, right? Because that's a macro level and that's obviously terrible. We want to be saying we're actually pretty confident that if we give ourselves a little bit of room around here, right, between this where we got in and what seems to be a resistance level, that's probably a decent level to put a stop loss. And if it breaks through that, then the trade's obviously potentially going to be breaking through that. We're on the wrong side of the trade, but we can enter here at this level, and the stop loss is so important to put at that level. So that resistance level where you've seen. Now, in terms of the take profit, again, you need to look at support and resistance levels. So we have an even smaller kind of micro support level around here, as you can see, that came in. Now, that's not great for a day trade, which is miles away, right? You can't really look for that. Now, as it happened, there was a massive sell-off, which would have made us great money if we would have done that. But you can't trade that because you don't know. This was news-based, and so, you know, we wouldn't have been able to predict that at all. What you can do on a short-term trade is where you're seeing this resistance, say, okay, we need to take profits somewhere. Now, where do we take that? Well, this is for a day trade on the 5-minute chart. That would be considered kind of macro support, but you wouldn't take it there. You would take it much earlier for a kind of short-term trade. So we're looking at previous levels. Around here would be decent, right, to take a profit. So that is where I would put a take profit anyway, somewhere around here where we're saying that's a kind of a decent level that we could definitely get back to, right? So that would be the trade here. Now, as you can see, I actually work from the stop loss first. So I work from my risk first and then look at potential take profit levels. Because if we're getting in around this level, what's the potential for it to actually just move away and make our trade, defunct basically? So that would be for me, the level around here where I'd be saying, this is something that has not worked out and we're actually moving up, because we had this big move in to a resistance, got sold off. So I can be confident the stop loss should be around here. In terms of take profits, just look for where the price action meets some support, and say that would be a good take profit for me around this level. Now, as you can see, the win ratio is 1.97, which is actually really decent. You could even just take profits way earlier. I would have a risk reward of at least 1, like I showed you. Risk of 1 to 1, isn't great. You want way more than that, but when you day trade, it's very, very difficult to do this. Remember, if you're day trading over 4, 5, or 8, 9 hours, you're not going to be getting like 5 to 1 ratios. It's impossible because the price can't move that much. What you're looking for is kind of 1 to 1, 1.2, 1.3. That would be a brilliant trade. And you can see that, you do have to be profitable quite a lot. And so you have to take losses fairly quick because you don't want these to move against you. Now, like I said, with day trading, it's very unpredictable. We could have made a massive load of profit if we would have put in a take profit here or put no take profit at all. You can see a great move there. Completely unpredictable on a day trade. Day trading is much more about getting that short-term order flow in. And so really what I want to hammer home here is that you need to understand longer term support and resistance levels and then compare that with shorter term order flow levels. Then look at previous levels of support and resistance on the chart, and also focus solely on your risk. So your stop loss level and why you're putting it there. There should be a specific local support or resistance level where you can see that the price is definitely bouncing off that each time in order to put a reliable stop loss in place. And then the take profit, you can have more autonomy with this, but for a very short-term day trade, you're just looking to take profits around a very short-term support and resistance level that you can see on the chart. So that works for both long and short in this case. If you want to trade on BitGet, that deposit bonus is down in the description. I'll leave some other helpful videos and resources down there as well. I'm James with Money's EG. Cheers for watching, and I'll see you in the next one.